Time now for the very latest from the ENCA Money Desk. Devin Morgan joins us. So, Dev, of course, worrying signs about the global economy. This, of course, won't do any favors for us.
No, it wouldn't. And there are a couple of things suggesting that the global economy has got a downturn, Shahan. China reporting the weakest growth in industrial output since 2002. Now, remember, that's the world's second largest economy. Germany's economy shrinking as exports slumped. And we just saw those protests in the Asian economic hub, Hong Kong, and the Argentinian economic crisis, all casting a dark shadow on the global markets and what you see in front of you. Look at that, the all share in the red. You just need to look at the local market to see the bloodbath. Banks are down and financials almost 2% in the red. Heavyweight Naspers, which is tied to the Chinese tech giant Tencent, also down, red across the board, in fact. So the JSE deeply down. Here's Sasfin's David Shapiro on why bad news from these big economies can cause such a rattle.
America's, 24% of the global economy, China about 16%. So if you put those two together, you've got over 40% of the global economy. Of course, you're going to feel the effects around the world. So, yeah, it could have been avoided, that's what we're saying.
David Shapiro there from Sasfin. Of course, the Rand also hurt by the gloomy Chinese and European data because it's another reason for investors to hold back on emerging market currencies. So look at that. We did so well yesterday, and you're back at 14 Rand 43 to the US dollar. It made some great gains overnight, but again, that gloomy global sentiment has just pushed it back down almost 2% weaker against the US dollar. So 15.43 to the greenback at the moment, Shahan.
Yeah, and then, of course, some data out today showing consumers have started shopping more. That, of course, could help us avoid a recession.
Absolutely. And then there's a couple of reasons why we look at these retail sales figures. Because, number one, they are an important indicator of how consumers are spending and whether or not they are indeed spending. The other important reason is that a favorable number essentially means we may escape a recession. So here you see what happened to the retail sales figure for June. It's up 2.4%, and this is higher, in fact, than what analysts had expected. It's welcome news showing that there is some turnaround happening at the tills. So consumers are spending, albeit very little. Now, consumer spending is also an important look at considering the GDP growth. And I'll bring up that slide in a moment, and you'll see that consumer spending actually makes up about 60% of our GDP. So the better the retail figures are, the greater the chance we have a good GDP figure. And you'll remember that come the first quarter, we had that negative growth rate of 3.2%. So with this figure, we can safely say that we have escaped another quarter of negative growth and a recession. We had some manufacturing and mining figures out earlier in the week. Slight positivity. You add that on the back of that retail figures, Shahan, and then you could actually just escape a recession and possibly have a positive number for GDP.
And we definitely need to escape a recession. Thanks so much for that. Appreciate it. Devin Morgan.